This next indicator we're going to talk about is one of my absolute favorites. It's called the Stochastics Indicator. It's a great indicator. A lot of technicians trade with it. And sometimes it is so consistently accurate that you would swear all you need to do is follow the indicator blindly and you just make money. It's not quite that good, but it is really, really a great indicator. So let me introduce you to the Stochastics Indicator. First thing you might want to know is this indicator was created in the 1950s by a guy named George Lane. And this is a momentum indicator, which is going to compare, here's the calculation, it compares the stock's full range to the current close of the stock for that day. And it comes in three variations. You've got the fast, you've got the slow, and then you've got the full. We're going to use the full, which is going to be the combination of the two, and that's going to be the best data that I think we can interpret together. This is going to be a range-bound indicator that's moving between 0 and 100, very much like your RSI, but here this is a big difference that you need to take note of. Your typical overbought settings are 80, and your typical oversold settings are 20. Remember, with the RSI, overbought was 70 and oversold was 30. With stochastics, 80 and 20 works a lot better. Don't confuse those two. Make sure you get the settings at 80 and 20 for overbought and oversold. Continuing on through here, understand that stochastics is really great at showing overbought and oversold levels, and it typically gives very good divergence signals. And in addition to those basic signals of overbought, oversold, and divergence, we also get bullish and bearish buy and sell signals because we have a crossover, much like we do with our moving averages. So that's another benefit that we get from the stochastics. This is marked here in italics. I want you to pay attention to this. Stochastics is the most practical in a sideways range-bound market. In other words, in a trading channel, anytime the stock is going sideways, stochastics is just impeccable. It is a great indicator. In fact, I've often said in a sideways market, stochastics is your best friend. Just like in a trend, your moving averages are your best friend. In a sideways market, stochastics is your best friend. Lock that in, remember that. So the next time you get stuck in a sideways market, look at your stochastics. It will tell you with extreme accuracy where the turning points are happening in that move. During a trend, the stochastics, this is another really important bullet point. During a trend, the stochastics tend to get overextended and they will stay there. Unlike with your RSI tends to get overbought and it will correct pretty quickly. With your stochastics, you can get overbought and you can actually stay there for quite some time in that trend. So just because you're overbought, it does not mean the momentum's about to shift. Just because you're oversold does not mean the momentum's about to shift. You've got to really wait for the full swing to come in there before you're going to get that signal of the shift in momentum. Let's look at some examples here. Take a look over here and notice where, again, I've highlighted it in red and green to indicate overbought and oversold. And notice how your stochastics just oscillates back and forth between overbought and oversold. Now, you're not going to see the red and green on your chart. I just did that for our own learning purposes here. But you can see how it oscillates right back and forth between overbought and oversold. And once you have that crossover, typically the momentum starts to shift quite a bit with that individual swing. You're also going to see the divergence that shapes up here. You see the divergence that we have on this trade. Same divergence that we saw earlier, which is very clearly spelled out here with our stochastics. And then finally, look at these buy and sell signals. Notice how everywhere I've circled it in red here, we've got a crossover. We've got the one line crossing over in the opposite direction. The green areas here, we've got the lines crossing the other direction. Those are buy signals. The red signals, or the red circles, are going to be sell signals. So anytime you get to an overbought or oversold and you get the lines crossing, it's going to be a buy or sell signal, suggesting that the swing, the momentum, is moving in the other direction. Let's dig into each of these so you can understand stochastics a little bit better. First, let me give you some settings, though. My typical settings, the ones that I use, are for %K, 13 and 7. And %D, I use a setting of 5 with overbought at 80 and 20. These are the settings that I use. If you use my chart templates, these are the ones that you're going to see. Very common settings, there's a couple of additional ones. One that's very common is 8, 3, and 3. And a lot of our students do like that, especially if you're day trading. If you're day trading on a daily chart, this is maybe a better setting, the 8, 3, and 3. But for more of a swing trading setup on a daily chart, the 13, 7, and 5 is probably going to work a little bit better for you. In both cases, overbought is at 80 and oversold is going to be at 20, regardless of which settings that you're using here. Now let's do a little bit of a comparison and take a look over here and notice the top versus the bottom. The bottom has got the 833 setting and the top has got 13, 7, and 5 setting. And you're going to notice that the 833 is a little bit more jagged. it's going to respond a little bit faster because it's a shorter term setting. Whereas the 13, 5, and 7 is going to be a lot more smooth. You're also going to notice areas like this little trend right here where stochastics just became overbought for months at a time. And occasionally that will happen as well. And you want to pay attention for those kind of things.